Hello folks, this is Danielle with Martlet Investments here with our August 2014 Educational Economic Update. In this month's video, we're going to be talking about the events that affected markets last month and how they impact you as an investor. We do ask that you stay tuned at the end of this update for our required disclosure statement. August was overall a pretty good month for the economy. Investors got their second look at second quarter gross domestic product numbers and are starting to think about what the rest of the year might look like economically. After a long cold winter caused economic activity to stagnate, the economy came roaring back in the second quarter. The latest estimate shows that the U.S. economy grew by 4.2%, which is the fastest pace of growth since the third quarter of 2013. But even better is that growth was seen across many sectors, indicating that this might not just be a one-time deal. After many quarters of sluggish growth, the economy might finally be moving towards a self-sustaining expansion, as growth in one area often feeds improvements elsewhere. Expansion in the labor market is feeding consumer confidence, which is translating into greater consumer spending, which will hopefully continue to stoke economic growth. One place in which consumer spending is visible is the retail sector. Though second quarter earnings were pretty lackluster for most retailers, the back-to-school season was a bright spot, hopefully portending greater consumer spending this quarter. Since back-to-school season is the second largest shopping period for retailers, it can often act as a bellwether of the very important holiday shopping season. Despite the fantastic GDP numbers, the news last month wasn't all great. Personal spending growth unexpectedly declined in July, indicating that consumption was weak at the beginning of the third quarter. Since consumer spending accounts for 70% of economic activity in the United States, a decline in personal spending could be a sign that Americans are cutting back on their expenses. However, the same report showed that household income increased during the same period, which could mean that Americans are simply saving more instead of spending their money. On the other hand, consumer sentiment rose significantly in August as Americans cheered up and regained their optimism about the economy. One measure of current expectations reached its highest level since before the most recent recession. So if consumer sentiment is up and personal spending is down, what does that mean for the economy going forward? Honestly, it's just really hard to say without more data. But we can say that the underlying trends point towards sustained economic growth and improvements across the economy. Looking ahead, we expect the situation in Ukraine to affect markets as investors worry about how deteriorating security and continuing sanctions will affect global markets. Although the U.S. economy does not appear to be affected by Russian sanctions, Europe's fragile economy is less able to withstand negative shocks. We will just have to wait and see. Hopefully we'll know more next month. Well, that pretty much is it for August educational update. If you have any questions or concerns, please give our office a call. We do have some upcoming events that we'd like you to know about. You can join us for a complimentary meal and educational workshop titled A Confident Financial Future. We'll hold dinner at Maggiano's in Richmond, Virginia. These are free events and we have 4 dates to choose from. If you would like more information about attending these events, please give us a call at 877-768-1919. You can also call that number if you have any questions or concerns about anything you heard in today's update. Once again, this is Danielle with Martlet Investments, signing off for the month of August 2014. Thanks everyone for tuning in.